Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. As always, I'm very excited to welcome you to yet another promising edition on the Forex Morning Mastery. In fact, our first edition for the new week, where we are going to be doing a follow-up detail on the videos I shared during the course of the weekend, and of course identify structural patterns that we are going to be using to understand how market participants are behaving, especially during the first early hours of the week, and of course use that information to position ourselves for the next move today. And in fact, we have some interesting development in the financial landscape from the political uncertainty from the United States, where we had that President Joe Biden of the United States had dropped out of the presidential race and has already nominated his vice president to be his first choice to take over from him. And of course, this has triggered some interesting development in the market, which at this point in time has dampening the buy pressure we saw in the US dollar from last week trading session. So we are going to be looking into the current market dynamics to see how market participants are digesting this information and what the pathway for the future is going to be like. For this week, we are going to be monitoring three financial assets as always, which includes the USOILSPOT. We are also going to be looking at the GBPUSD and of course my favorite asset, which is the XAUUSD. And for those of you who have been with me, who are with me on my TradingView and Telegram platform, you definitely must have gotten an insight into what my plans are for this week, especially on the XAUUSD and the GBPUSD. And of course, I also gave an update this morning on my Telegram and TradingView platform. However, I was not able to share publicly the USOILSPOT, so we are going to be doing a top-down analysis on the USOILSPOT today in conjunction with the fundamental backdrop that is driving the sentiment in the market to make a well-informed decisions today. So I do encourage us all to stay tuned in, grab your favorite beverage, biscuit, what have you, so that you can be around to be part of this insightful idea we are going to be looking at this morning. My own name is Sharif Daramola, and for the next 30-40 minutes I will be your host, as I will take you on a trading journey where we evaluate the financial market together. And I do know that there are some of us amongst us who are probably new with us and wondering what is happening here. Well, the Forex Morning Mastery is an idea that was born out of the necessity to do follow-up details on the asset I shared during the weekend. And it's important for you to also understand that this is not a signal service platform in any way, but instead it is an avenue, a platform, a community where we as retail traders come together to have a deep understanding into how market participants are behaving, and of course use that historical data to navigate the current market dynamics, positioning ourselves strategically for the next move. And depending on what type of trader you are, be it a scalper, day trader, swing trader, or even a positional trader, you can actually use the information you gather in this community to make your own independent trading decisions. So once again, I do welcome you on board and encourage you to actively engage in the comment section. Trust me, I'm here. If you have any question related to financial market or as regards to the market we are looking at, feel free to drop them in the comment section. No question sounds stupid at all. Every question is quite meaningful to me, and trust me, I'm here and willing to be of help in that regard. And to help the SEO for the Forex Morning Mastery, I encourage us all to drop the hashtag Forex Morning Mastery in the comment section. This will boost the SEO by allowing the YouTube algorithm to push the video to a wider audience of traders who may find this content beneficial to them. So I will do the same right now. Forex Morning Mastery. So I encourage us all to do the same. This is one way you can help this community to grow, so please do as I have done. So I just dropped it in the comment section. You can copy and paste it, and I will really be grateful for this one. And along the line, if you have found this content helpful and useful in making your independent trading decision, I'll really appreciate your support by giving the video a thumbs up. Let's make the number of likes on this video tally with the number of people on board. Thank you very much in advance as you do so. So with that being said, here we will be diving right into the business, and as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And for those of you who have been with me for a while, you know this is our daily routine. We can't start a day without checking the economic calendar, and of course by paying attention to the upcoming economic events that will influence the market sentiment, we can identify how upcoming event might affect price action, and this also helps us to spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our positioning more effectively. And based on the assets we are looking at for this week, we are going to be focusing on high impactful event from both the United States and the United Kingdom economic docket. However, for days that do not have high impactful event, we usually include mid-tier economic features to at least give us an idea on what market participants will be looking at for that day to decide whether they are going to be buying or selling, or even stepping aside waiting for fresh impetus. Now, for today, Monday, July 22nd, we do not have both high impactful and mid-tier economic events for today. So today's economic calendar is quite empty from both economies. So what this simply means is that we do not have a choice than to rely on our technical skills to understand how market participants are behaving, and of course use that information to see if we are going to be buying or selling today. So with that being said, let's dive right into the business. I'm here to see your response in the comment section. Please, this goes a long way in helping the algorithm to promote the channel to a wider audience of traders. So I look forward to seeing your hashtags in the comment section. Type in Forex Morning Mastery, and thank you very much as you do so. So the first asset we are going to be looking at today is going to be the USOILSPOT, and what an interesting situation we have here on this particular chart. And since the beginning of the week, the market has been looking a little bit indecisive as price action has been caught within a range bound structure, which we are going to be looking into in a moment. But before we go into that detail, we need to also have, before we go into the holistic perspective around this current market dynamic, we also want to have a deep insight into what are the various factors behind the scenes that has been influencing and will continue to influence the sentiment in the market for this week. And by having a deep understanding into this, we can weigh the most probable direction price action will go, at least for the first half of the week. Now, one of the major factors that will be influencing the USOILSPOT is the current weakness in the US dollar. Remember, we've talked about this several times, how the US dollar is related to the US oil commodity being the fact that it is a US dollar denominated asset. And whenever the dollar is expensive, there is a high chance that demand is going to be low, because other currency will find the dollar expensive to buy. They need to convert their currencies to the US dollar before they buy the USOILSPOT. And if it's expensive, we see a downturn on that one, which obviously will influence the demand in the market. And if the dollar is very cheap, then the demand is expected to increase. Now, as at this morning, and due to the by Joe Biden's exit announcement and expectation of the Federal Reserve interest rate cut, this is not a good. This development is not a good, or let me say, it's not in alignment with a demand for the US dollar at this point in time, which may see the USOILSPOT use that opportunity to gain some traction. Then the other factor that will be influencing the sentiment in the market is the supply chain concerns. Remember, we've talked about this countless of times, the ongoing Russian-Ukraine war. We also have the Middle East conflict, which has posed risk on supply chains, hereby providing a tailwind for crude oil prices. Now, in an era where there is geopolitical tensions, especially in those zones where oil commodity is expected to flow into the global market, concerns of supply disruption is the order of the day. And due to this, we may likely see market being cautious, and of course start building up their stockpile, and hereby increasing the demand for this commodity. So that is one factor we are also going to be looking at. And then the other factor that is counterbalancing this whole positive stance for the USOILSPOT is the economic situation in China. For those of you who were with me last week, we talked about how China's economy is currently struggling, and this may likely dampen the demand for oil, hereby limiting potential gain for the US crude oil. And we all know that China is the largest importer of crude oil in the world, and their economy says a lot in determining whether supply is going to whether demand is going to rise or not. And so within this whole contradicting development, what is the market participants going to do? What are the chances that buyers will come into play? And of course, what are the chances that sellers might likely continue the downtrend that started during the second half of last week's trading session? Now, let's take a look at the chart from a technical standpoint. And to do this, we would like to scale up into the higher time frame so we can have an holistic perspective into what is really going on in this particular market. Now, taking into account the character of price action since the month of September of last year, that's about 10 to 11 months ago, it is quite clear that the market has been very bearish. And look at the series of lower highs here further emphasize this fact. And if we connect the series of lower highs, look at that beautiful descending trend line we have here. Now, the first touch was here last year, October, and we saw the second touch here in the month of April, and the recent one happened just a couple of weeks ago, as buyers found it difficult to break through that as descending trend line. However, if we come back into the beginning of this year, it is that's from a short-term perspective, it's more or less a bullish scenario. Look at what we have: higher lows here, giving us an ascending trend line, as you will see here. And I did projected this one into the structure where we may see price maybe drop back into the structure to incite an uptrend continuation, or even break down the structure to incite a sell-off. Now, we are not sure if that is going to be the case, but to help us navigate this current market dynamics, we need a key level that will be serving as a key determinant to guide our trading decisions for this week. And for those of you who have been with me for a while now, you know how we use our key level. Our key level is a structure we identify on the chart ahead of the upcoming week, where if price remains above that structure, we want to be looking out for patterns and structures that support the idea of buying. And if price breaks down that key level, then we want to be looking out for patterns and structures that support the idea of selling. Now, if we take into consideration the character of price action in the last 1 year, you will see I have my key level situated at the $78.50 area. And of course, if you look at this level closely, or let me call it a zone closely, you will see how it has played a significant role in determining the direction of price action in the last 12 months. Now, let's go to as far as last year, July. We can see sometime around this time last year, this level was serving as a strong demand zone, as you will see here, before it got broken to the downside in the month of November of last year, and it remained a selling niche for a while. November, December, January, and of course we saw a little bit of consolidation in February before price climbed back up again. Consolidation again in the month of May. We saw a little bit of a breakdown, and currently, and as at the end of last week trading session, you will see that price action closed exactly at that $78.50 level. Now, as we prepare for the for this week, the question at this point in time is, will that level again serve as a platform to drive another wave of bullish momentum, or will the level be broken like it has done in the past to incite a sell-off in this market? So what we are going to be doing now is to try and see how market participants will be reacting to this, or have been reacting to this level since the beginning of the week, to make a decision on what our next line of action will be. Now, scaling down into our execution time frame, this is what I was able to come up with. Now, let me zoom in so that we can see things more clearly. Currently, I just saw now that my sell position has got triggered on the USOILSPOT. And if we consider the bearish impulsive leg that started during the second half of last week, you will see that since the new week began, price action has been consolidating within a range. As you will see here, price was confined within the $78.95 level and the $78.60 area for the last 8 to 10 hours or so, giving us a downtrend continuation pattern, which is more or less looking like a bearish rectangle. And of course, you know how we treat our range bound structures in this community. We exercise patience, wait for either price breaking out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. So as you will see right now, price has broken down the support line, signaling a potential downtrend continuation, or the validation of a downtrend continuation pattern. And of course, we have a retest of structure, which has further emphasized that sellers are probably building up some momentum to continue to the downside. Now, with the situation I have here, I already have a sell position triggered at this point in time, and if you had missed out on that opportunity, it's still making sense that we can join a bearish move at this point in time. And anywhere below the $78.50 level will be promising to continue the downtrend move. So I will feel much more comfortable as long as price remains below that key level on my sell position at this point. And of course, our stop losses should be anywhere around the $78.90 or $79 area. That is between 30 to 35 pips will do just fine for our stop loss on this sell position. So at this point in time, and based on the current structure, we have a downtrend continuation pattern. Let me give you a visual representation. We have an impulsive move, right? Price consolidated for a while within that structure. So we have something like a bearish rectangle supporting price continuing to the downside. So let's see how the market is going to play out going forward. And as soon as price moves significantly well in our favor, we move our stop losses, secure the current sell position. I will definitely be giving us updates on both my TradingView and Telegram platform. However, in as much as we want to maintain a bearish bias based on the character of price action around our key level this morning, we cannot ignore the potential that buyers can also come in at any point in time. Remember, this key level in the past has played a significant role in pushing price to the upside. It has a memory for buying power. So if the possibility of price taking us out of the sell position cannot be neglected. So in the case that price action takes us out of the sell position and then breaks out of the resistant line of that range bound structure, we could be seeing an opportunity to join an uptrend move. But due to the fact that we are within a strong descending trend, I would like to see confirmation before jumping into that buy position. And when I mean confirmation, I want to see price come back, retest the structure, then we can now look out for opportunities to continue the uptrend move. So this is how we are going to be navigating the current market dynamics today. And our center of focus is basically between the $78.95 and the $78.60 area. If you have any questions whatsoever or you need some further clarifications, feel free to let me know in the comment section. And in that regard, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. So I'll see you in the next 10-15 seconds from now. Cheers. All right. So I see a couple of comments here from Majun Arun. Good morning to you. How are you doing today? It's been a while since I saw you. Trust you're doing very well. I'm doing very well here. Thank you very much. And I trust you had a wonderful weekend too. I also see you, Nick Cleaves. Thank you very much for your support on that one. That reminds me, please help draw the hashtag Forex Morning Mastery in the comment section. Thank you very much, Samuel. Good morning to you too. And let's support the channel by clicking on that thumbs up as well. We have over 9 people on board and we currently have 4 likes, so there are still some of us in the house who are yet to click on that like button. And like I said earlier, this is one way you can actually support this community to grow, and thank you very much as you do so. All right, so in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. So we will be moving into the next financial asset on our watch list. Stay tuned in, guys. Alright, so the next asset we are going to be looking at this morning is the GBPUSD, the British pounds against the US dollar. And last week we were buying the GBPUSD during the first half of last week, and in fact we had the privilege of capitalizing on that bullish momentum. I think we had some about 200 pips move on that one before the bearish momentum came in, and of course we did miss out on most of that bearish move as we were looking forward to price retracing and then continue the uptrend, but that never happened as we saw price break through our buy window and of course continue to drop to the downside. So this week we are looking at a new trading setup, and for those of you who saw my weekend video on the GBPUSD, you will be familiar with the higher time frame structure. I will not be going into that detail because of the limited time I do have, but if you in any way missed out on my GBPUSD weekend analysis, you can find the link right in the description box of this current video. You can check it out after the live session so you can intimate yourself with the ideas I had on the higher time frame, how we were able to identify the major trend, the key level which will be guiding our decisions for this week, and of course how we got to this point you're seeing here on the 1 hour time frame. So at that this morning I updated us on both my TradingView and Telegram platform, and this is what we are looking at. Now before we go into the technical details here, let's run through what the fundamental factors are, that is the various factors behind the scenes which has been driving the sentiment in the market and which is likely going to continue driving the sentiment in this market. Now one of the major ones is the current weakness in the US dollar. Remember last week the US dollar took advantage of the weak United Kingdom retail sales data to ramp up some momentum, which could be seen as a profit-taking activity on the part of British pound holders, taking some profit off the chart due to that economic event that came in lower than the market expected. And it appears price action is back into a crucial juncture in this market. If you watch my video on the GBPUSD, remember I shared with you on the higher time frame a major ascending trend line, which you will see here that even despite that strong bearish momentum that started last week, we saw that as soon as price action got into that ascending trend line, we begin to notice buy pressure resume around that area, and this has continued into the early hours of the new week. As you will see, every attempt by sellers to break through that ascending trend line has been negated at every point in time, and this further emphasized the strength of the buyers at this point in time, which could be the beginning of the third leg of the bullish momentum that started in the month of April. Now, will this momentum continue? Well, it is looking very likely at this point in time. Then another factor behind the scenes that will influence the sentiment in the market is the uncertainty surrounding the Bank of England's interest rate cut. Now, we've been talking about this potential interest rate cut for a while. And in matter of fact, the good news for the British economy is the fact that inflation is looking steady at this point in time. You know, their target is 2% target, and they met the target last month, that is the month of May, sorry. And for the month of June, the CPI data that came in last week also showed that it remained at 2%, so which is quite steady. And of course, this is supposed to incite the beginning of interest rate cuts by the Bank of England. But no, that is not the case right now, because the inflation in the service sector is still looking very, very high. In fact, it recorded a 5.7% for the month of the month of June, which is very, very high at this point in time. And as a result of this, the Bank of England policymakers have been showing concerns as regards to that sector. Hence, it is not going to be reasonable at this point in time to cut interest rates. So the chances that the Bank of England is going to cut interest rate very soon is very, very thin. And due to this, I think the path of least resistance for the British pound is still looking very bullish at this point in time. We all know how higher interest rate for an extended period of time usually favors investors bringing their capital into that currency asset due to the return on investment they stand to gain, and the differential in interest rate from the US dollar, which everyone is already projecting that the Fed will be cutting interest rate at least by the month of September due to the easing inflation and of course the dwindling economy at this point in time. So if we look at things from both the fundamental and technical perspective, everything is pointing at a bullish direction at this point in time. And due to this situation, how do we navigate the current market dynamic to join that uptrend move? Are we going to see price retrace a little bit? Will the profit-taking activity incite more sell-offs before the bullish momentum happen, or are we going to be seeing the bullish momentum start all the way from the beginning of this week? And in the absence of any significant market moving economic data releases from both economies, we are going to be relying on the character of price action at the beginning of this week. Now, looking at the structure here from a technical standpoint, since the new week has begun, in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours, you will have seen that price action has been confined within a range that is between the 1.294 and the 1.29050 area to emphasize the prevailing uncertainty in this market during the early hours of this week. And this for me is a sign that there is an indecision going on in the market right now. However, within this whole indecisive phase, you will definitely see that the market is tending to find higher lows, respecting the ascending trend line at every point. Sellers try to break through that structure, making it obvious that the market might continue the uptrend today. Maybe there will be a recovery for the pound sterling. So as a result of this, I have a buy stop order sitting at the resistant line of the range bound structure. So a breakout of the resistant line will be all we need to continue the uptrend scenario. And of course, by placing a buy stop order there, we do want to be having enough breathing space for price action to move around. So stop losses could be somewhere between 25 to 35 pips. Let's allow enough space for this for the expected volatility around this particular area. So we are looking at buying anywhere above the 1.294, and let's see how far this momentum is going to go. Then another thing we could look out for here is if we look at this structure here, we saw this decline here, price drops in looking like something like a double bottom structure, where the neckline of this double bottom structure is falling at exactly the 1.29230 area. So 29230 level, let me just mark that one there. So if we see price come back into the structure here, which lines up with that ascending trend line, and continue buy pressure persist here, on our lower time frame, let's say the 5, 10 or 15 minutes time frame, we could actually join that uptrend scenario early enough and then had more positions at the breakout of the 1.294. So for me, based on the current market dynamics, based on the structural patterns on the chart and the fundamental factors behind the scenes, I am holding on to a bullish bias. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers could still continue the downtrend move. Remember, it has been a strong bearish momentum since last week, last midweek, and if price can break down this range bound structure, we will be looking out for selling opportunities. So in fact, for me to sell, considering that this area has been a strong demand zone in the past, I would like to see a breakdown retest of structure before jumping into a sell position. Now, that retest of structure is going to be serving as a confirmation that will make us have that confidence that sellers may likely be taking over this market. So the only condition that will make us sell is for price to break and slice through this zone between the 1.2905 and the 1.29 area. However, we could see an opportunity to sell before the breakdown happens. That is, if price action can break down the ascending trend line and then retest it, give us signs that buyers are finding it difficult to climb back above the ascending trend line, which will obviously reflect on the chart as continued selling pressure. Then we can consider selling before the breakdown of the structure happens to maximize the bearish momentum. So you can see that we are at a crucial juncture. In fact, anytime price action is trading around the trend line, it's a crucial moment. Hence, we want to see the pattern that price action is forming around that trend line, which will give us a clue into what market participants are thinking and what their decision is likely going to be in the nearest future. And based on what we have right now, things are looking bullish at this point. Let's see how the market will play out. I guess in the next couple of hours, we should be having an headway of where price is likely going. So this is my simple view on the GBPUSD for this morning. So let's continue to monitor price action, and if anything new happens, trust me, I will be dropping my updates on both my TradingView and Telegram platform. If you have any questions or you need some further clarifications as regards to this current setup, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decision irrespective of whatever type of trader you are. And do not forget to give the video a thumbs up. Your likes are valuable to me. In fact, it serves as a source of inspiration for me to do more of this content, and of course also helps the algorithm promote the video to a wide audience of traders who may find the content beneficial to them too. And thank you very much as you do so. So I see your comment here, Nick Cliffs. Nick Cliffs, how are you doing? So Nick Cliffs says he's new to this channel. Well, I'm very glad to have you around with us this morning. I hope you have found the content helpful and useful in making your independent trading decisions. So it says here, can you elaborate how you create your levels on XAUUSD? Well, I guess you missed out on my weekend video on the XAUUSD, which of course explains in detail how we were able to identify the trend and the key levels that will be guiding our decisions for the week. So I encourage you to go ahead and watch that video. I have the link to that video right in the description box of this current video you're watching, so please go ahead and check it out after the live session to have an insight into how we got to this point on this chart. All right, so thank you. So in the absence of no further questions, I want to assume that we are all on the same page, and so in that regard we shall be moving right into the final asset on our watch list. Stay tuned in. Oh, I'm very sorry about that. Thank you very much for your feedbacks. Nikki Cliffs, thank you very much on that one. Yes, it's not just for you, it's me here. I just saw that I muted my microphone, and I hope everything is quite fine there. Please let me know in the comment section if you can hear me now. So like I was saying earlier, we have quite an interesting development going on in the gold market landscape right now, especially after President of United States Joe Biden announced yesterday that he would no longer be part of the presidential race, and he has nominated his Vice President Kamala Harris to take over his position and his favorite nominee for this race. And this obviously has sent a ripple of uncertainty into the global market space, as market participants now are not sure what is likely going to happen. Will this be a positive development for the US dollar, or will it turn out to be a negative one? And if you remember last week, the assassination attempt on US President, the former President Donald Trump, increased the sentiment in the US dollar market, as majority started buying the US dollar due to the fact that Donald Trump is considered to be a president that supports the business within the United States against competitions from investment from outside the country. And this escalated and was a positive signal for the US dollar, which culminated into that 2,400 level that you are seeing on the chart. So like I said on the GBPUSD, we are not going into the higher time frame here. If you do want to have an insight into how we got to this point you're seeing on the chart, please check out my weekend video on the XAUUSD, where I gave a detailed insight into a top-down analysis on that asset. Now, looking at the structure we have here as at this morning, you will see that price action, just like what we saw on the GBPUSD, price action is oscillating around that ascending trend line we identified on the higher time frame. In fact, we are at a crucial juncture at this point in time, and within this ascending trend line, you can see price action is confined within a range that is between the $2,412.15 level and the $2,399.50 area, to emphasize the prevailing uncertainty in this particular market. And of course, you know how we treat our range bound structure. We want to exercise patience and wait for the market buyers and sellers to finally make a decision on where they are going, which would reflect on the chart as either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, beyond the scenes, what are the factors that will support a bullish idea? What are the factors that are expected to support a bullish idea on the gold commodity? Now, one of them is the dovish Fed expectation. In fact, the idea of the Federal Reserve considering cutting interest rates as early as the month of September is one of the major factors that is influencing the US dollar negatively at this point in time. We have easing inflation in the United States. Labor-oriented data are not too good at this point in time, and the economic data churning out from the United States in the last couple of weeks has not been very impressive, which shows that it is high time they started considering cutting interest rate. And in fact, the Fed chairman last week emphasized this in a speech, talked about the possibility of cutting interest rate. And if you look at the CME Fed Watch tool, which is a tool that gives us the sentiment in percentage of whether or not interest rate will be cut, it is currently at 94% that Federal Reserve will be cutting interest rates. So what this simply means is that the sentiment in the market is leaning towards an interest rate cut, which is not going to be a good scenario for the US dollar at this point, and of course will be favoring the XAUUSD. So in light of that one, the path of least resistance for gold is looking bullish. Then the other factor behind the scene is the global economic risk, the geopolitical tensions. For instance, in the Middle East, we are looking at the war between Israel, and right now we are looking at Hezbollah in the picture at this point in time. We also have the Russian-Ukraine war ongoing too as well. And then we also have concerns as regards to the Chinese economy. Last week, the data coming in from China were not impressive. And all of this may make investors pull their funds from currency assets into non-yielding assets, safe haven assets such as gold. Now, for me, I think the path of resistance is looking bullish, but we cannot ignore the idea that market participants might want to step aside waiting for the US core PCE data, which is coming in on Friday. Remember, the core PCE is also considered to be an inflationary gauge before making any decisions at this point in time. So we may likely see an extended sideways trading activity prior to this event. So what this simply means is that if we are taking on any position, we want to be around to ensure that we move our stop losses accordingly, secure the positions so that we don't get caught up in a scenario where price action will come back, take us out of the position in a loss. Because right now there is a high chance that we will see price consolidate for a while before prior to that event. So in light of this development, this range bound structure here is going to be our yardstick guiding our trading activity, at least for the first half of this week. So since price is still oscillating around the ascending trend line, I want to see price climb back above the ascending trend line for me to feel a little bit comfortable in this situation. Then another thing I was able to spot here, if we take an holistic view into the current market structure on the 1 hour time frame, taking into consideration this impulsive bearish leg, you will see that we begin to see something that looks like a reversal setup in the form of a double bottom structure, where the resistance line of that range bound structure we identified at the $2,412.15 level will be serving as the neckline of that reversal pattern. And whenever we identify something like this, we will need price to break out, retest the neckline to validate this reversal setup to continue that uptrend move. So buying the XAUUSD will make a lot of sense at the breakout of the $2,412 area. However, in as much as we're looking out for buying opportunities, you know how we do it in this community, we also try to keep tabs with the potentials the sellers also have in this market. What are the conditions, what are the criteria we want to see on this chart that will make us feel comfortable selling the XAUUSD, just in case the bullish potential never clicks? Now, for us to sell the XAUUSD, in fact, obviously, we need to see price trading below that ascending trend line, which is currently doing at least in the last 4 to 5 hours now. But I would want to see price break down our key level at the 2,400. Remember, this is our key level, and if you're yet to watch my weekend video, I encourage you to go ahead and watch it so you can see how important this key level is within this current market dynamics we are looking at. In fact, I would like to see price break down and retest the structure before I jump into a sell position. And why is that? Well, we all saw what the fundamental factors are saying. Everything is pointing towards the upside scenario. And if we look at what happened here Friday, despite that strong bearish momentum, as soon as price came into the zone, we saw buy pressure resume around that area. And in fact, if you look at the nature and character of each candles around that confluence, you will see we had a lot of hammer candle, which technically tells us that buyers are present around this area. So if I want to sell below the 2,400, I would like to see price break down, give me some form of confirmation like a retest of structure or a retest of that ascending trend line, where continuous selling pressure reveals that buyers are finding it difficult to climb back above the ascending trend line. Then I will feel much comfortable joining a bearish move. So that is the only condition that will make me want to start considering selling at this point in time. Except for that, the path of resistance for me is looking bullish. I just hope that this is going to be the case, and we are going to definitely be around to capitalize on whatever opportunity the market presents to us. And trust me, I will be giving us updates on both my TradingView and Telegram platform. Now, with that being said, that reminds me, I also want to intimate you of the Go challenge, which we started last week. And for those who would like to join, so the Go challenge is, I have never traded a small side account before, and due to comments and feedback I've received in the through the course of my time doing this, I realized that most traders usually use a small size account. So in that regard, I decided to try out a $200 account where I'm hoping to stretch it and see how far we can take a $200 account for the next 30 days. And as a result of this, the Go Challenge platform was born. And during the Go Challenge, I'm going to be taking a short-term trading approach, which is going to be more like scalping stroke trade, day trading approach. And if you're one who is willing to be part of that session, you can see the link right in the description box of this current video, so you can watch me trade the gold market live from the London session right into the first half of the New York session. So I look forward to having you around on that platform. So the links to the Go Challenge is right in the description box below. You can register with a token. I think it's about $30 or so. After I actually use my local currency, which is in Naira, so I think it should not be more than $50 thereabout or so. Join the link and let's be part of that session together. Let's see how far we can move a $200 account to. So I think I made myself very clear on this one. If you have any questions on the XAUUSD, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. And I am yet to see your response as regards to your support. If you have found this content helpful and useful, kindly support the channel by clicking on the like button. It's a way of inspiring me to do more, and of course it goes a long way in also allowing the YouTube algorithm to push the video to a wider audience of traders who may find the content beneficial to them, and at the same time promote this community as well. So let's see if there are any questions whatsoever before we round off today's Forex Morning Mastery. See you in about 10-15 seconds from now. I see your comment, Manju Arun. You're very much welcome. I'm glad you found this content useful. Nick Cliffs, thank you very much for your feedback. And who else is here again? So I think it's on this note we can call it a day in the absence of no questions. So it has been a great pleasure spending some moment with you guys, looking at the financial market together and see how we can strategically position ourselves for the next move. And today's session, we were able to take on the 3 financial assets which we will be monitoring for this week, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, where we were able to identify simple trading setups to guide our trading decisions going forward. And for those of you, I hope you've marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So all we need to do right now is exercise patience and let's allow the structures to mature. And another thing I also want to say here is that it may take a while before we gain some momentum this week, as market participants will need some time to digest the recent development in the US political landscape as regards to what I said earlier before they finally make an aggressive bet. So we may likely see some extended sideways trading activities. Let's take that into consideration, and that means that if we have a position triggered, let's be around. As soon as price moves significantly, let's move our stop loss accordingly and secure the position at least at break even. And with that being said, I also want to emphasize that trading the financial market is risky, and whatever decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place to mitigate against any risk. I also saw a comment here before I round off from John Alabi. Good morning to you. John, how are you doing today? And John says here that what's the possibility of the market breaking the $2,412.15 level, grab liquidity, and then break down the 2,400 level? Gold can be very manipulative asset. Yes, of course, it's a possibility that could happen. I'm not negating that idea. And one thing I usually tell people I work with personally is that you cannot be scared of losing money and expect to make money. It is not possible. You have to know how to lose money so that you can make money. Now, what we have done in the market is to find an edge, identifying a structure that will give us an headway on how we will be positioning ourselves for the next move. So it is very possible that price action can break out the 2,412, trigger our buy position, and then take us out of that position, and then trigger the sell position, and then continues to the downside. Of course, if it continues to the downside, then we can actually recoup the loss we incurred on the buy position as well, and we are going to be good on that one. So the idea here is for us to be willing to lose money, and when we lose money, the question now is how much are we losing when we lose money? Are you losing something that your emotions cannot handle? What percentage of your portfolio size are you losing on that particular trade? So for me, I'm not scared of losing money. So one thing I'm focused on is how much am I losing when I lose money? Am I losing a reasonable amount of my portfolio so that I can still be in the market to take advantage of that move when it finally happens? So that is the basic idea behind my own decision making in the market. So anything can happen. Whatever happens in the market, I am on standby to capitalize on whatever opportunity. Of course, no one says whatever, if you take a buy position, is going to be in profit. No one knows. Anything can happen. I hope I answered your question, John Alabi. All right. So in the on this note, I think we have come to the end of today's Forex Morning Mastery. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from this session. And if you have done so, I look forward to seeing more of you same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing so far, and of course prepare for the second half of the new week. So it's on this note I would like to wish us all the best of luck today. Trade smart. So I look forward to seeing you in my go challenge, and of course during the in the comment section of both my Trading View and Telegram platform. So it's on this note I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.